it has been a slow process. If you compare this move to what I just mentioned, '09 to 2011, that was a very spiky. 2010, silver went straight up, and then it obviously peaked in early 2011. But this move has been more sustainable. You've got fundamental buyers coming into the market. This is not a short cover rally. This is a real solid bull market, and the move's quite different. Silver is associated with zinc and copper, and gold as well. But yeah, no, there's no real big mines coming online, and you've got Pan American that's got a couple of interesting assets in its portfolio, but they're long a ways away from being permitted. And other than that, there's really nothing out there. There's lots of small stuff. A lot of juniors who have small assets that might produce 1 million ounces there, 1 million ounces here, but that's nothing. In the whole scheme of things, we're producing 850 million ounces a year, and to put a dent on that market, you're going to need 10 First Majestics, to affect the supply of the metal. It's just not going to happen.
If I'm sitting
Today, we're tracking one of the most explosive shifts in global finance unfolding right now. And it centers not around stocks, not crypto, but silver. Yes, the same metal powering the clean energy transition, semiconductors, defense technology, AI infrastructure, and the global financial system's monetary backbone. Silver broke above the long-term ceilings of $50 and surged toward its all-time highs, briefly touching $54 an ounce before retracing down to $48, and according to industry leaders, this move is fundamentally different from the speculative spikes of the past. At the same time, governments worldwide are accelerating money creation, debt levels are exploding, and purchasing power is quietly evaporating. The message from the markets is clear. Fiat currency is weakening, and the world is waking up. So, is this the start of triple-digit silver? And what does it mean for everyday savers watching their dollars buy less, and less, and less? Let's break it down. In a recent investor discussion, First Majestic CEO Keith Neumeyer, one of the world's most recognized silver producers, highlighted a major shift in the market. This is not a short cover rally. This is a real, solid bull market. Unlike the 2011 spike driven by speculators, what we're seeing now is institutional interest, as large generalist funds that previously ignored silver are now actively seeking exposure. Also, the U.S. government recently classified silver as a critical mineral for U.S. supply chains. This could lead to more supply deficits, as LBMA reports shows record amount of silver leaving their vault. Similarly, industrial demand from AI, chips, EVs and energy and military tech and central bank accumulation have fueled a massive demand for silver amidst a 5-year supply deficit. This time, investors aren't gambling. They're hedging against monetary debasement and systemic risk. And while silver has touched $50 twice in modern history, Neumeyer says this breakout is different and likely to push through $50 and beyond. Now, we will show you clips of the latest interview, but before we do, please like, share, and subscribe to get more up-to-date financial commentary and stay ahead of the curve. Thank you.
Move that took place back in 2011, if you probably remember, silver was in April of 2009, silver was about $21, $22. And then by November 2009, silver dipped almost to $9. It got down to the low nines, which is pretty surprising for everyone. And then, by April of 2011, less than 2 years later, silver hit 49.80 in April of 2011. So it was straight up. Most of that move from the low 40s to almost 50 was all short covering. So it was a very spike orientated move. This move is quite different. You've got fundamental buyers that are actually buying silver because they're waking up to the needs of silver, with the U.S. government now calling silver critical, or, I think just the institutions, I think everyone's now saying, hey, look, silver is an unloved or misunderstood metal. And people are waking up to the fact that, we need silver for every day, for everything we do in our daily lives. And it's a critical metal. And we need it in our lifetime. And it's great to see that people, I've been talking about silver for 20 years, been pounding the pavement for 20 years. And it's nice to see some of the podcasts I'm listening to these days that, people are, finally realizing that silver is such a quick straight up, because, been, being a trader for, 35 years. I like markets to be stable, and I like markets to kind of retrace and go higher, retrace, go higher, higher lows, higher highs, and, create proper, sustainable long-term markets. And I think we're seeing that in the silver space. If you go back 2 years and look at the chart, it's pretty strong. There's a huge fundamental bid behind the metal right now, which is really good to see. So, if you did see this, parabolic spike, parabolic spikes aren't good in any market. It doesn't matter if it's silver or any stock. It's all the same. Going straight up, because, been, being a trader for, 35 years. I like markets to be stable, and I like markets to kind of retrace and go higher, retrace, go higher, higher lows, higher highs, and, create proper, sustainable long-term markets. And I think we're seeing that in the silver space. If you look.
But the story isn't just industrial. Behind the scenes, a monetary shift is underway. Global debt has exploded to record levels. Central banks continue accumulating gold at the fastest pace in modern history. And the purchasing power of fiat currencies, from the US dollar to the yen, is quietly deteriorating. As confidence in government-issued money frays, investors are rediscovering what markets understood for centuries. Precious metals like silver are not alternative assets, they are base money. Silver, historically linked to gold as real money, is stepping back into its monetary role. Unlike speculative rallies fueled by social media hype, today's momentum feels measured, disciplined, and strategic. Neumeyer warns that we haven't even seen true retail frenzy yet, no mass rush from the public, no panic buying wave. And yet, mints like First Mint are reporting record sales as early adopters accumulate physical metal quietly in the background. In 2011, silver surged because traders were excited. In 2025, silver is rising because the global monetary system is under structural, mathematical strain, and the market is repositioning for what comes next. Let's show you the remaining clips of the interview. Please like, share, and subscribe.
Silver is associated with zinc and copper, and gold as well. But there's no real big mines coming online, and you've got Pan American that's got a couple of interesting assets in its portfolio, but they're long a ways away from being permitted. And other than that, there's really nothing out there. There's lots of small stuff. A lot of juniors who have small assets that might produce 1 million ounces there, 1 million ounces here, but that's nothing. In the whole scheme of things, we're producing 850 million ounces a year, and to put a dent on that market, you're going to need 10 First Majestics, to affect the supply of the metal. It's just not going to happen.
If I'm sitting,
silver is people say, if we go into a recession or something, or world economy somehow cracks, and that could impact silver. But usually an environment like that is good for gold. And then there is a huge bid in gold right now from the central banks and investors around the world. So gold is very supportive to the silver price. So I don't know if we did go into a recession. I'm not sure if we really would have an impact on silver prices. We do know that with the electrification and with the AI and all the things that we want to do with technology going forward, chip manufacturing and everything else, all these things require silver. So the demand for the metal is not going to go anywhere. Even if we did get into a recession, everything's going to stop in AI. I highly doubt it. So you could have dips and valleys along the way, but at the end of the day, we're in deficits. We've been in multiple deficits for 5 years now. Those deficits don't appear to be changing in any way. So it'll be very interesting because the miners, have to obviously produce more metal to fill that deficit, and the miners just can't do it at these current prices. You talk about $50 silver, it's still not enough to motivate the mining sector to make the necessary investments.
If previous monetary cycles are any guide, by the time the public realizes what is happening, the easy gains will already be gone. The window to position is not when silver becomes front-page news. It's right before it does. Stay informed, stay disciplined. And remember, confidence is the foundation of every currency system. When confidence shifts, wealth moves first, fast, and usually quietly. If you found this breakdown valuable, subscribe, turn on notifications, and share this with someone who still thinks silver is just jewelry or spare change.